To me, the coin doesn't make you money, it's the process. And making money and keeping money is a very different game. If you want to actually keep your profits, you got to have a process, a strategy, an edge. You can't just rely on coin picks on Twitter. It doesn't work like that. I know that in markets, 90% of the money is made in 10% of the time. This is one of my fundamental characteristics that I need to see to buy a project. I need to see a difference in the perception versus the reality. Perception versus reality is where you capture the upside. Most people don't know how to make money in crypto. They don't understand that.
Thank you for sitting down for this discussion with me, Dan. And without much delay, let's get right into it. What I'm curious about knowing is, how are you going about determining value proposition, and how has that evolved for you over time in terms of what you were looking at initially and what that looks like now?
I think when I started, my way that I approached the project was from a very naive perspective. And I think my way that I look at valuations and figuring out what something's worth now is very much from the perspective of crypto as a casino. It's zero sum. And it's all about what people think something's worth. And I don't really care as much about like what I actually think something's worth, if it's actually a good project, good tech. It's more about what do I think people will think about this coin after I've bought it. And I have like a full framework of all the different sort of fundamental sort of metrics that I look at. And none of it really revolves around like the tech as much. Like maybe tech's obviously an important variable, but it's really about perception and narratives and things like, is the project the 0 to 1 primitive? Like, is it something new? Nothing, not as much really related to actual like sort of fundamental based investing, which is what you might do more in the stock market, right? You'd look at the revenue numbers, all of this sort of stuff, and you would look at actual real fundamental data to determine if it's under or overvalued. I think when crypto's in bear markets, we do come back to a place where it's much more about revenue. Will this project stick around? All that sort of stuff, which makes a lot of sense because the market's dead. People want to invest in something real because they're scared. They want to make sure they're not buying something that's a scam. In the bull run, all that stuff goes out the window. If you just buy projects which are all about revenue and real users and all this sort of stuff, you buy a project like GMX, which is barely going up, and you miss out on Bonk, which is up 100x, which is literally just a meme coin. So depending on what sort of stage of the market cycle that you're in will also vary what sort of coins you're buying and how you do your fundamental analysis as well.
So that was brilliant. Actually, I wanted to come just to that point that you just made regarding fundamentals. So John Maynard Keynes is one of the most influential economists of modern times. He's also recorded as the founder of macroeconomics. And he compared the stock market to a beauty contest. Basically, he said the winner is not the most beautiful contestant, but the one whom the greatest number of people consider beautiful. And I think that holds really true for crypto as well, right? It's a very attention economy. And using that framework that's used in traditional finance of fundamentals, I mean, a lot of people have suffered tremendous losses trying to apply that to crypto.
The way I view crypto is that every single person who holds a coin is an affiliate marketer for their project. And you need the best set of affiliate marketers for your project to succeed. And if you are running a really crappy community and your holders are very crappy holders, they're not very good affiliates, they're not going to be able to bring more customers, right? If you build a project where the holder base is a subset of really, really smart, good marketers who know how to get new eyeballs onto the project, that is a project which can expand a lot more than a project that's just filled with a bunch of VCs who are really, really extractionary VCs who just want to make a bunch of money and they're not going to be good affiliates for the project, right? Maybe the VC looks cool when you have it on the list of investors. Oh, wow, Paradigm invested in this project. But outside of that, the VC or whoever it is that is investing into the project, you need them to be a good affiliate. So I would view a project's holder base as its affiliates. And this is why the initial distribution of projects is really, really important. Who you give your coins to, who you make rich is super important because the holders are the marketers who bring in new people, right? As a project, you can only do so much marketing from your project's Twitter account, from your YouTube channel. You need people in your community to shill the coin to new people who join and shill it to more people, right? That's just how the game works.
Yeah, you brought up such a beautiful point, Dan. You need to understand who you're giving your money. Like the foundation of the project matters. The people who are investing in that project who got in at the foundation, right? Because it's almost like a house of bricks that you build up. And the other thing I want to touch on is the information flow, right? Because a lot of people FOMO in, they'll see by the time it's on Twitter, right? And there's a lot of engagement, reposts and likes, you're already at the tail end of, whatever microcycle of that specific project. What do you think about that in terms of the information flow? Where do you think is, like, how do you go about determining where you're sitting in that information flow? A lot of people are getting their information off of Twitter. I personally believe by the time it's on Twitter, you're already, depending on the project, right? You already might be too late. in terms of getting in on it? What are your thoughts on that?
It's a really good question. The best way to do fundamental analysis is forming a thesis with information that no one else has. If you form a thesis and you came up with it, and it was only a couple of your friends who you've shared it with who also agree with this thesis, you didn't rely on Twitter shills, nothing like that, and this thesis actually plays out, you have the biggest amount of upside possible because you go from no one understanding it to everyone understanding it. If you only buy a coin after everyone has spoken about it on Twitter, you might only have a 10% larger pool of people who can go from not understanding the thesis to understanding it. And that's how you make money in crypto, from buying it when not many people get it to selling it when everyone gets it, right? And this is, I bought Toshi at a 2.5 million market cap. This is the most recent example I can give you. That thesis was just a couple of my friends. We all sort of knew this project. And I built this thesis on top of what I saw from my friends talking about it initially, with ideas that no one had ever spoken about that I had seen online. I came up with it and I told all my friends about it. We all bought into Toshi at a very small market cap. It's gone up to it's currently it's at like a 65 million. So it's like over a 20x, right? And the reason that you're able to capture that upside is, I guess one component is it was a very small project, but another component is you're riding the wave from no one understanding something to everyone understanding it. And it's funny because when this coin was heavily spoken about on Twitter only a couple weeks ago, that was at $100 million market cap. Everyone was tweeting about it. That was when you would have heard about it. But that was after guys like me had caught majority of the upside, right? And we're telling everyone, guys, like, you should not be buying here. Everyone understands the thesis now. Like, yeah, of course you found it on Twitter now, but that's the worst time to buy. And the way I view information flow in crypto is there's a hierarchy of information flow. First, the information is created by the smart people who sort of see theses and narratives and new ideas through new perspectives that no one has considered. They share it with their close inner circle. These groups you cannot pay to join. It is only for people who are also very, very smart. So all the smart people have little Telegram groups that they all hang out in. And once that information has been digested, it then goes to the private alpha groups. So you pay to join a paid group. That's where the next information gets sent, right? And that's why paid groups can be useful, because you do climb higher on the hierarchy of information flow. Next, you get it onto Twitter. You know, Twitter's probably the best public resource of information, better than YouTube, Facebook, etc. And then obviously it gets to YouTube, and then it gets to Facebook and, you know, all these other more shitty platforms to get information from. So your goal as an investor is you want to climb the hierarchy as high as possible. A good first step is to join a paid group that's better than Twitter. At least you're investing alongside your favorite influencer versus against them. Because at the end of the day, everyone in crypto is trying to take your money in some way, whether it's through the order book, through you paying for something at their website, signing up through their exchange referral link, buying a coin they shilled you. Everyone's trying to take your money. People demonize paid group leaders as if they're somehow worse than everyone else, when we're all just trying to take each other's money equally. It's fair game in crypto. Like, at least with a paid group, you're now positioning yourself to be aligned from an incentive standpoint. So if you join a paid group with some guy that, you know, is really good at information, he has an incentive to make you rich because you're a testimonial for him to make more money from more people joining. If you follow someone's information on Twitter, they have no incentive to make you wealthy. What's the advantage? Their incentive is that they want to collect clout when a coin goes up. But let's say they say buy a Toshi at this price and it goes up 4x, right? They're going to, you know, clout farm. I told you to buy, you didn't buy, you're an idiot. You know, look at all this money I just made. But they'll tell you when to buy because they collect the clout when it goes up. But they never tell you when to sell because there's no clout to collect on selling. Is not as much as buying, right? People want to know how to make money. And the money's made from buying low, selling high, right? People aren't as interested in, oh, this guy sold the top. Wow, that would have saved me from a 60% decline. People don't care about that. They care about, this guy found this coin early. It's up 20x now. I should have listened to him. Now he's collecting clout on Twitter. That's just how it works. So that's why another reason why you can't listen to Twitter shills. It's because when they're tweeting about the coin, it's after the market has validated their initial thesis, which is when it's getting close to too late to be buying in.
Yeah, so you covered some great points there, and there's a lot of different ways we can take this discussion. But I mean, we're talking about shilling, and you know, there's this environment of KOLs, right? All right, let's get into it a little bit. So with KOLs, you know, they get the tokens, and essentially they're shilling the project as, I mean, we know, as they're dumping on people who are buying after they're shilling. What are your general thoughts on that KOL environment? Do you think people do it ethically? I mean, from what I've seen, to be perfectly honest, Most of the times it's people, they get the tokens behind the scenes and then they'll show it, they'll get some exit lick for the project and for themselves, and they'll dump their tokens. What is your general thought process on that entire thing?
I have never done a paid chill in my life, and I never will. It just sits wrong with me. I get contacted every day about, can you promote this coin? Because they know I can send them like $1 million in people buying. And I just have zero interest in it because to me, the coin doesn't make you money. It's the process. And this is what Kun talks about a lot on Twitter. This is not even like my original idea, but it's so true though. It's what I've learned from markets. It's not about the coin. It's about the process, the strategy. I've spoken to thousands of crypto investors over the course of the past 6 years. And the common pattern I see with all of them when they don't make money is they focus all their attention on finding a coin that's going to make them rich. It's all about the coin. Which coins should I buy? What's the best portfolio? What's the next 100x coin? That doesn't matter because you buy the best coin on the planet at the wrong time, you lose just as much as buying the worst coin at the top. The coin doesn't matter because your entry and exit is the only thing which will make you money. And the entry and exit isn't determined by the project, it's determined by a process. So what you need to do is come up with a strategy that can be applied to really any project that allows you to buy it at a good price, sell it at a good price, and you make money from the difference between the entry and the exit. That is not determined by the coin. People like finding the best coin because they think if this just goes up enough from my entry and I just sell it at a price above my entry, I've now made money. Like it's not the right approach to crypto. Everyone thinks it's about the coin, but it's not about the coin. A good metaphor to help understand this is imagine a guy who has never gotten laid before asking you like what line to say to a girl. Like, hey, I want to go talk to this girl. What should I say to her? It's not about the line. It's about the energy, the confidence, eye contact. It's about the vibe. It's about all the work that you did before you even went up to her. Did you go to the gym? Do you look healthy? Did you shave today? Did you put on deodorant? It's about all the things you do before you've even bought the coin. And it's not even about the coin. It's about the process that you follow. So this is like with all areas of life. Everyone wants shortcuts. People who love chasing, what coin is the best to buy are just the same people chasing shortcuts as the people trying to lose fat without going to the gym, trying to get girls with particular lines. It's the same laziness. So if you want to make money in crypto as an investor and keep that money, making money and keeping money is a very different game. If you want to actually keep your profits, you got to have a process, a strategy, an edge. You can't just rely on coin picks on Twitter. It doesn't work like that.
There's all this posting regarding P&Ls and people turning $100 into $1 million, and people fall into that trap where they just want to hit it big on one coin, right? Instead of having a process, having a system in place like you described. And along the same lines, I want to change gears a little bit. There's a lot of folks that come in with smaller portfolios, right? Looking to multiply that portfolio. What advice would you give someone with for example, like a 4-figure portfolio? Well, there's a couple of questions. What do you think is the sweet spot in terms of market cap when it comes to looking at micro cap coins in terms of upside where you can kind of cap the risk? Do you trade coins that are like 1 million market cap? Does that matter to you? And how should they manage their risk when using such a small portfolio?
So I would say that if you don't have what you would call like a good bankroll, like a 5-figure portfolio, then you pretty much exclusively should be looking to buy projects below let's say around $100 million market cap. I would say that the rules are to an extent arbitrary. Like I say, buy something below 100 mil market cap. But look, there's probably a 150 mil coin that you could buy and make a 10x. But just as a general rule of thumb, if you only have like $5,000, I wouldn't even be touching Bitcoin or Ethereum. Like, you come to crypto to make asymmetric outsized returns. You're not going to get that buying Bitcoin at 40K with $4,000. What, you're going to double your money? Congrats, you made 1 month of your wage. That doesn't change your life at all. We come to crypto to make life-changing wealth, right? So you only do that by buying a coin which is going to give you the asymmetric upside for your portfolio size. If I've got multiple millions, I can buy Bitcoin, no problem at all, because it's still giving me a dollar level return that I'm happy with. The percent return's less, but that's okay because I'm dealing with a larger portfolio. So if I had, let's say, $5,000 to my name, what I would be doing is 2 things exclusively. Looking to basically airdrop farm and buy new projects that are below let's say a $100 million market cap. Ideally, something even below like a $50 million market cap, right? And I'd be looking for, let's say, between 3 to 5 core positions. Not too little that you're too concentrated, but not so many that you're diversifying your attention to between too many projects, right? So with airdrop farming, on Solana, if all you did was stake Solana on, I think it was either Jito or Jupiter. I think it was Jupiter, one of those platforms, right? You made a bunch of money. You made tons of money. All you had to do was stake one Solana, pretty sure it was Jito. And I think they gave away $225 million to Solana community. And it was between, like 10, 20,000 wallets. I can't remember exactly.
Yeah, that Jito airdrop was insane.
Yeah, and you basically did nothing for that one. Oh. Now, obviously, the airdrop was big because everyone was fading Solana. And if you do an airdrop like, let's say, ZK Sync, right, you're probably not going to make as much money as that because everyone knows that airdrop, right? The edge is in the information arbitrage. But look, I think airdrop farming with not much money is a great way to make money because it's got asymmetric upside. How much did you spend and how much money did you need to make $10,000 on one of those recent Solana airdrops? You needed barely any money. So that's a good way to get your initial bankroll. As well, like I said, anything below $50, $100 million market cap, 3 to 5 core positions in projects you think can do really well. The funny thing is everyone always buys these really great fundamental coins, but these ones tend to perform the worst in the part of the market where there's the most money to make. Bonk, best performing coin of any of the recent coins. Toshi, one of the best performing coins of all the recent coins. They're both just meme coins. They're both just animals that have not even much use. I think Bonk has a little bit of use. There's a Bonk bot and there's a couple of things that are sort of useful. But, there's a lot of really good fundamental coins that have not performed anywhere near as well as the meme coins. So if you're dealing with a smaller portfolio, you probably are going to end up having a large portion of your money in meme-related projects. You got to think about who your exit liquidity is. Who are you selling to? When you buy a coin, don't think about what's best now. Think about what is the best for who I'm going to sell to? Because at the end of the bull run, you want to make the most money. You make the most money by buying what the people that you're going to sell to are going to buy. What do all the new people buy at the end of a bull run? They buy meme coins. They buy things that have good narratives behind them. They buy whatever was marketed the best to them. New people don't know what the best tech is. They don't know the difference between Solana and Ethereum. They don't have the comprehension to understand that level of tech. They don't know. They just buy what sounds good, what is funny, what is going up the most in price, and whatever is shilled to them at the end of the bull run. So if you're dealing with a smaller portfolio, don't be afraid if your portfolio is largely made up of like a meme-related sort of portfolio. That is just what performs the best. And that's what you're going to need to get your bankroll up. You can't mid-curve crypto and go, I'm not going to own a bunch of meme coins because they're scams. No, you got to pick a side of the curve, okay?
Yeah, you brought up some great points. And I think you're right. I mean, airdrop farming, I think it's the most positive EV in terms of a smaller portfolio because you're essentially volunteering your time for the most part. I mean, it's a give and take. You have to give something, right? So you have to give your time in order to form those airdrops to build up your bankroll. It's asymmetric risk, right? So you have to take that risk in order to build up your portfolio. And talking about risk, what I wanted to talk to you about was in terms of risk management, how has that evolved for you? And how does that look like for you now? How do you manage your risk?
I think my approach to crypto has really become about managing my risk before I've even entered a position, managing my risk through letting the thesis play out and waiting for a validation or an invalidation of my thesis. So what I mean by this is I know that in markets, 90% of the money is made in 10% of the time. 90% of the time, I don't need to be doing anything, right? And your name is Stoic. I think Stoic is like a very good representation of what you should be in markets. So by being Stoic, by being calm, patient, able to wait for the right opportunities to come up, I will spend 90% of the time not buying anything. I'm probably like the laziest crypto guy in terms of if you looked at my portfolio ever. I barely make any changes ever. I just make a few small changes at the right times, but it's those changes which are in that, 10% of decisions making up 90% of the results bracket that gets me all the results. Whereas other people, they're making so many decisions, they're spending all their time on portfolio changes, which are only going to make very small impacts on their total returns. A lot of the risk management I've done up front, people try to manage risk by just entering at whatever price and going, I'll manage the risk after I've entered. No, you can't. That's not how you approach it with investing. I think with investing, you manage the risk before you've even entered the position, right? You wait for basically the price to go to a point where, most of the data sets that you're looking at are showing you a confluence to say that it's near a bottom. You wait for fear to become apparent in the market, and you wait for your intuition to tell you that this is an opportune time. You enter. Once you've entered, you've obviously entered a particular project because you have a thesis on it of how the market's going to move. And then you wait for the thesis to either get invalidated or get validated by the market. So I buy a coin because I've done all the risk management up front, waiting for an opportune time where I have an edge, where I know that 8 out of 10 times that entry was making me money, and maybe 2 out of 10 times it was wrong. And when the thesis is playing out, let's say, I'll give you an example of a thesis, right? I knew about Toshi when it was at a $30 million market cap. I didn't buy it at 20, didn't buy it at 10, didn't buy it at 5. I started buying it at $2.5 million market cap after it had a breakout from an accumulation range. And I saw that no one cared about base anymore, right? Everyone cared about base when Friendtech came out. Then Friendtech was forgotten. And I was like, well, now this is probably the point of least interest in base. The market cap is so low, it just didn't make sense. My intuition was telling me that like, this doesn't make sense to me. Like, this is the point of most fear, right? And that's where you enter. It's about studying the thesis. So my thesis is Coinbase gets all the users, they funnel them to base, they buy Toshi. The biggest competitor to Toshi is its second biggest meme coin, which is Mochi. So I'm constantly analyzing the building of both of these projects. If I see that Mochi, or however you would say it, is going to have a chance to beat Toshi, I might consider adding a percent of my meme exposure on base to both of the coins to sort of hedge my bets, right? So that might be me updating my thesis over time. Maybe both coins sort of get actually replaced by another new meme coin that launches, and I would actually want to rotate my exposure to that project. Or maybe Coinbase gets regulated to death and it's actually no longer the number one player, and that the whole thesis is thrown out the window. So then I probably have to close all the positions, and then I'd want to look for something else. That's how I approach it at the moment.
Yeah, no, that's beautiful. So, you describe your process in terms of having a thesis up front, and, this merry-go-round of people running around. We just recently saw it. A little comical to see with like the rotations between the chains, like INJ, SEI, like people just bridging from one chain to the other, trying to capture like whatever little that's left on there. And by the time they bridge over and get to that chain, people like you have already been sitting there and have a thesis. They're already in quite a bit at that point. So, and then these people are coming in towards the end of that move, and they're essentially just buying the top, right? And so, like you mentioned, I forget who told me this, and they brought up a really good point. There's two things that you should focus on. What are coins that are completely forgotten about, or chains that are completely forgotten about? And what are the most hated coins and chains, right? We saw what happened with Sol. How much hate was there at the bottom when Sol was at $8? Everyone was saying the chain's going to die. It's never coming back. And look at the rally it's had. And similarly, recently, I mean, it was getting euphoric, right? There was all, people talking crap about ETH. It's going to die. And, just today, I mean, it was looking pretty good in terms of breaking out. But those are two things that I like to think about a lot. What's the most hated and what's completely forgotten about? That's the way I think about it. And I think that's similar to what you just described as well.
Well, the way I look at it is this. Hate and love are the same thing. At the end of the day, they both bring attention. And attention is good, assuming the underlying project has a high conversion rate of turning a viewer into a buyer. So for example, Hex is the perfect example. Hex, everyone hates, but Hex can convert a certain percent of this hate into buyers. It doesn't matter if all of us smart people know it's a scam. There's enough dumb people that the conversion rate is high enough that it can turn all these hating viewers, some of them, into buyers. So Solana, it's not necessarily going to turn haters into buyers because there's dumb people. It's going to turn haters into buyers because it's actually a really good project. And the reason that Solana is my number one position in my portfolio, it's the biggest one in my portfolio, and I've been bullish on this one since $7 in the last bull run. I've always thought this was a very, very good project. The reason that I've always had a conviction in Solana was the only alt chain that I thought that it was the only coin outside of Ethereum and Bitcoin that I think could have multi-cycle outperformance. I've been saying that to people for years, and it's sort of playing out that way, right? It's almost at new highs against ETH. Why has this happened? Well, I know based off of the people that I've spoken to, but Solana's tech and its community and the size of the developer community is like no other project in crypto. So I know that even if Solana is hated, the hate will turn into buyers because people will look into the coin after it's being spoken about. They will look at what's being built, how many developers there are, how good the tech is, how cheap it is, how fast it is, how easy it is to use. They'll compare it to Microsoft, early days of Microsoft after the dot-com bubble, and they will go, okay, Solana is actually a good project. And that will have a good conversion rate of turning haters into buyers. And that's what we've seen with this Solana rally. Has all the hate, but it has a high conversion rate of viewers to buyers because it's actually a good project. This is one of my fundamental characteristics that I need to see to buy a project. I need to see a difference in the perception versus the reality. Perception versus reality is where you capture the upside. It's by knowing something that others don't yet know, but they will know. I knew Solana is great tech, fast, cheap, easy to use. Is the only thing that matters, if you want to get mass adoption, Decentralization is obviously important to a certain extent, but it's not the main contributing factor if you want to get 1 billion people to use your blockchain. And I knew that the perception of Solana was it was dead. All my friends hated it, but the reality was there was an underlying booming ecosystem rising from the ashes of the FTX collapse. And that's how you pick a project using the perception versus reality fundamental analysis sort of framework.
100%. And the community was still active. They were still building continuously, even during the bear when everyone was saying it was going to die. So that concept of information arbitrage, I actually read this book recently as well, The Alchemy of Finance. I don't know if you've gotten a chance to read that book by George Soros. It's really good. It talks about this as well. That's kind of how he built his thesis as well, as this concept of information arbitrage, which is really interesting. And I also think it's twofold, right? In terms of price being an advertising mechanism. So once you have the fundamentals, for example, with Solana, the solid fundamentals, as well as people just see it skyrocketing, right? I mean, from $8, it's over 10x at this point. It's something about people like buying higher because there's an element of FOMO once a coin has done a 10x or these multiples, right? So I think it's basically self-fueling where both of them combine and it really skyrockets certain projects.
Most people don't know how to make money in crypto. They don't understand that you need to buy when no one talks about a coin and sell it when everyone knows about it. But also, chasing momentum is a profitable strategy. And there's a lot of people who won't buy a coin until it's going up for very valid reasons, which is they want to hop onto the train and they don't necessarily want to capture the whole train ride. They just want to go from here to one stop ahead, which is totally fine. There's many ways to approach crypto. If you view a coin going up as a train, you can hop on at one stop and hop off at the next, which is a momentum trader. You can try to hop off the train before it's even got to the next stop, which is more like a day trader, right? You're just hopping in and out really quick. You can ride most of the journey, which is more like a long-term investor. And there's no right or wrong answer, but there is a lot of money which chases momentum, which chases the flow of capital. And that creates a self-fulfilling prophecy where price goes up, more people come in because there's a larger amount of strategies which will now chase this coin, which makes the price go up more, which then brings in the dumb people who buy late, which then makes price go up more. And so there's like different stages of the buyer. When the coin's dead, it's the long term. When the coin starts to go good, it's the momentum capital. And then at the end of the bull run, it's the dumb money, right? And that's why coins can go up after it's been bought, it's been going up a lot. There's just different stages of bias, which you need to account for.
Yeah, 100%. And I like to think of it as there's a fair value and then what the assessed value is. And when no one knows about it, the assessed value is obviously a lot lower than what the fair value is. And that starts catching up as people start piling in. And at a certain point, it just gets unsustainable, right? That's when you have the blow off top where, at the end where everyone who doesn't even know anything about the project, they're just seeing the price shoot up. They start piling in. And that's when the assessed value gets far higher than the fair value. And so, yeah, understanding that kind of mechanism and how that works is really important, as you mentioned.
It relates back to the affiliate marketing concept. If you have 10 affiliates at the bottom of the bear market, they can only get so many new people. But those 10 people get 100 people. 100 affiliates, you can do a lot better. With 100 affiliates, you get 1,000. With 1,000, you can get everyone's attention. But once you've got everyone's attention, you then need people outside of crypto. But that's the hard part because 99% of these coins can't get people outside of crypto to come in. So your affiliate marketing bubble reaches a peak. Once you've got everyone in crypto Twitter and YouTube knowing about your coin, you've just captured the entire market. The only projects which can possibly get money from exit liquidity, which is what you need for that super cycle to occur, is Bitcoin with its ETF and maybe Solana if it can build a really strong app ecosystem. But really outside of that, I haven't seen anything that can bring in that exit liquidity, which could create a super cycle or even a bigger sort of Ponzi bubble.
Yeah, you bring up an interesting point, and I've been thinking about this a lot as well in terms of bringing in retail. There's still a gap in terms of, the learning curve, right? Do you think platforms like TikTok, I'm not on TikTok, so I'm not sure if there's any activity in terms of crypto or trying to bring in the average person into crypto. Do you think that's going to play a role this cycle where we get more retail because of TikTok and platforms like that? Or you think there's still a significant gap to be had?
I think the information for new investors in crypto is absolutely horrendous.
Yeah.
Because all the information is telling you all the fallacies about what you think makes you money in crypto, but what doesn't. For example, all the videos that are about what coin to buy, they're all talking about the best projects, right? That's not, we've just gone over. That's not important. It's about the process. No one will tell a new investor, don't worry about the coin, it's about the process. What's a new investor supposed to do to that? They're like, okay, but how do I get a process? But also, when you are trying to get people to click on your YouTube video, for example, you have to appeal to what people click on. Now, what do most people do in crypto? They lose money because they don't know how to make money, right? So if you want to get the most clicks, to get the most views, to make the most money, you have to sell them not what they need, but what they want. And what they want is easy ways to make fast money, the best 100x coins for the bull run, the step-by-step process, how to find the next upcoming coins. You have to sell them what they want, not what they need, if you want views. And this is why the people who have the best content in crypto never get the most views, because they don't sell people what they want, they sell them what they need. This podcast won't get as many views as some of the biggest podcasts because we're telling people what they need,
100%.
not what they want.
Yep.
Right? And that's why this informational gap in crypto exists. You want to get the most views. The videos that people find when they get into crypto are the worst videos because they're being sold not what they need, but what they want. And what they want is only going to lose them money. But it doesn't matter what you teach a new person, they're always going to lose money. Yeah. Crypto is a casino. It's not a place to use cool apps. It's not a place to do anything. Crypto is exclusively right now a casino. And the thing with casinos where you have money on the table is that you join and you lose all your money because you don't know what you're doing. You're not good enough to make money. There's people like me who've been in the game, and like yourself, who've been in the game for years and years. How is a new guy going to beat us? It's impossible. We know too much. We know way more than you guys. You're just not going to beat us at this game. So you're ultimately, inevitably, there's no universe where you come out of this game making tons of money when you're a new guy. You can obviously make lots of money as a new guy, but you're not going to keep it. You're going to lose it eventually to the people who have a strategy, a process, and an edge. You're also going to lose it to the house who just ends up soaking up all the money anyway. Look at Binance during its peak days. Look at all the money Binance soaked up. People trading. Binance just soaks up billions and billions and billions of this money, right? That's just how the game goes. Like, the new guys are never going to get good information. And even if they did, they're going to lose all their money anyway because they're just not good enough to make money.
You bring up a great point. And we've seen even in this last cycle, how many people made millions of dollars and ran it down to nothing, right? And it's all because there's no process in place. There's no system. I mean, it's easy to make money when everything's going up, right? You can just buy and just sit on your ass and you'll have more money. I don't know if you follow Pentoshi on Twitter, but he recently spoke about this quite a bit. Is making money and keeping money. Keeping money is a completely different art. So a lot of people listening in right now, if this is your first cycle, maybe it's your second cycle, you're aware of this. A lot of people have made a lot of money, but they've also lost almost all of it. Even Pentoshi himself, he discusses this. In this first cycle, he made a ton of money and then he lost it all. Then he made some more and then he lost a little. And I think it was the third cycle where he basically, made a ton of money after that. So like you said, it's a process that you will need to go through. I don't think there's any avoiding losing money, but you want to do your best to still have chips at the table at the end of it, even when you end up losing money. You want to win big, you want to win small, you want to lose small, but you want to avoid losing big because once you're out of powder, then it's a wrap, right? You don't have anything to bid with. So I think that's really important to keep in mind.
I think once you're at the stage where you can make money, you definitely don't want to lose big because, like you said, you lose your bankroll. The bankroll is the thing that makes you rich. So survival is the key. But I think when you're starting off, a lot of people will only learn a lesson if it was super painful. And so if you never have a big loss, a lot of these lessons won't get internalized to the point where you won't make that mistake again. And there's a quote, it goes, "Fool me once, shame on you. Fool me twice, shame on me." Right? You can make a mistake once, that's totally fine. The mistake made once was just a part of the process. And the loss must be big enough where that mistake is ingrained into your brain for the rest of your life. And you're not going to have that lesson be ingrained unless there was a lot of pain associated. If you only lose a little bit of money and you learn, ouch, I lost $100, now I know not to do that, you're probably going to forget. You have to have it ingrained into your brain forever. I lost so much money during the bear market of like 2018, right? And also like 2019. That is forever ingrained into my brain. I remember what the COVID crash felt like. I lost like half my net worth in a day. Like, I remember what that felt like because it was so painful, right? It was so painful that the only emotion I could end up feeling was just laughter. I was just laughing because I was like, what the fuck? I just lost like so much money. The only emotion that I could resort to was just laughing. But it was still painful. It was just like a coping mechanism, right? Yeah. And if I didn't lose big, I wouldn't have learned the lesson and had it ingrained into my brain forever. And then this is the biggest mistake that people make. Even if they lose big, a lot of them still don't learn the lesson and they make the same mistakes cycle after cycle after cycle. I know guys who've been in crypto since like 2013 and they still haven't made a bunch, like heaps of money. They still don't have big portfolios. It's because they haven't internalized the lessons. You have to go through a full market cycle because at each step of the circle, there's a lesson. And until you've fully internalized that lesson, when you go back over that part of the cycle, you're going to remake that mistake again. You're like, imagine you stub your toe and it hurts, right? But then you go back to the same part of your room where you stubbed your toe and you do it again. And it just keeps happening over and over until you learn, ow, that hurt. I have to not step right there or I'm going to stub my toe, right? If you don't fully learn a lesson when the mistake happens, you're going to make the same mistake again, but it's going to take you 3-4 years to remake that mistake because that was only a mistake that could be made at that particular point in the market cycle.
Yeah, that's a beautiful point as well. And I talk about this a lot on my Twitter. I think pain is probably the best teacher if you use it in the right way, right? It's like you said, if you keep making the same mistakes, there's only so many times you can make the same mistake before you completely run out of the game. So like you said, I mean, losing big will teach you a lesson, but unfortunately, there's not many people that can learn from that. And they'll use their emotions to kind of revenge trade or try to make it all back in one trade. And it's a self-fueling cycle. It's basically a loop. So it goes back to the conversation we've been having. You have to be extremely systematic in nature. You're going to make mistakes, and the goal is to learn from those mistakes and try not to make them again.
I think that you're ultimately just going to have to make a bunch of mistakes, lose a bunch of money. You can't skip this process. It's fate. Like in Spider-Man, the recent Spider-Man, I haven't watched it, but my friend was telling me about this word, like the canon event. I was like, what is that? He said, oh, it's like when in Spider-Man, like he always gets bitten by the spider in each universe and his girlfriend always dies in each universe. It's a canon event. It can't be avoided. Crypto and all the mistakes you have to learn are all canon events. You cannot be long-term profitable without learning each individual lesson, because each individual lesson learnt is a mistake avoided. Every mistake you avoid is an increase in your win rate, right? You only make money when you avoid enough mistakes where your win rate is high enough that your profit is more than your loss. When you're a beginner, there's so many mistakes that you have to make that you're just going to end up losing a ton. And that reduces your win rate, which means you're no longer in profit because you lose more than you win, right? It doesn't mean that you're not going to win. It means that you're inevitably going to later on come across enough losses that you lose the winning, money. So until you've made all of the mistakes, you're not going to have a win rate high enough to justify all the money that you can make. And no matter how asymmetric your upside is, even if your downside's so minimal, you're just going to have to make a million mistakes and you're not going to make money. So the goal is that you understand that all these losses and lessons are a canon event. You cannot avoid them. You're probably not going to make too much money, if any at all, in your first market cycle. You're going to have to be at this game 3 to 4 years. And then, and only then, do you have a chance at making millions of dollars.
Yeah, those are all extremely great points. And I hope everyone listening in is really digesting this information and really listening in. You want to make those mistakes with a smaller portfolio, right? Because I've personally known people, their number was 10 million this last cycle, right? They got to 8 million and they kept leveraging up and they ran it back down to, nothing basically. And that was horrifying to see. Right. But unfortunately, they hadn't learned their lesson. This was their second or third cycle. So they hadn't learned that lesson. Yeah. Like you mentioned, I think you're going to make the mistakes. It's going to happen, but you better hope you make those mistakes earlier on and learn from them so that once you go on to make a significant sum of money, you can keep a significant chunk of that money. And let's pivot a little bit. So what I wanted to talk to you about as well was narratives, right? So there's a lot of narratives floating around and people are chasing after them. There's AI, there's, perps on dexes, and there's a ton of different narratives. How do you go about assessing these narratives? I mean, you alluded to it overall, like how you look at projects and everything, but do you look at narratives as its own thing, or you don't really care about like narratives? Do you look at, okay, I want some exposure in this sector, in this sector, in this sector? How do you approach that?
Narratives are one of the segments. I have like 12 main characteristics. One of them is advanced narrative analysis. I think narratives are very, very important. I think that there is a lot of sectors in crypto and there's a lot of average narratives, and people have a hard time building convincing narratives. A lot of people, like every second day, I get a message like, hey, what do you think of this coin? And I ask them, like, what's your thesis? And they'll give me some really shit narrative about why they think this coin's going up. And I'll be like, this just isn't convincing enough. This is like a 2D narrative. You need to look at it from like a 3D perspective. And I think that regardless of narrative, I think the most important thing is flows, thinking about where the money is going to flow. So when I look at crypto for this bull run and I look at all the big players and I look at where the money's going, I think the biggest flow is Coinbase to Base. It just makes sense to me. Coinbase is the biggest crypto exchange in the world now. Binance and FTX, its two biggest competitors, down the drain, right? Binance is just, it's delisting all its BUSD pairs. BUSD, its main stable coins, they're having to get rid of it slowly. Like Coinbase is just the winner. And they're going to get all these users and they're going to funnel them all to Base, because in all of their internal documents of the long-term roadmap of Base, me speaking to a number of the Coinbase team and what their plan is, I just know what they're going to do. And then you have to ask yourself, okay, now that I know where the money's flowing, what's the biggest potential narrative that can form around this flow of capital? So what is the highest beta project that you can buy on an alt chain? Well, it's the meme coin, right? And this is one of the narratives that's formed on Twitter in the past month, which is what everyone's catching up on after I already was thinking of this months ago, right? Buying Toshi at $2.5 million market cap. My thesis is the biggest beta play of any chain is its meme coin. That's why I bought Toshi at the bottom. Now everyone on Twitter is all chasing all the meme coins on Injective. Monad's talking about launching its own meme coin. Seed, there's Cyan, like everyone's doing it now, right? So that narrative came to fruition after I had already considered the flow of capital. So I think flow of capital, I look at before narrative, at least in this example. In the way that I understood that this thesis would play out again is you have to look at what also happened in prior bull runs. So you have to look at it from a fractal perspective. So Dogecoin, the first ever meme coin, uses Litecoin technology. A lot of people think that Doge is like an Ethereum coin. It's not. Doge is using the Litecoin technology. It's a totally separate coin. And then people were like, okay, well, imagine if Ethereum had its own meme coin. And that was SHIB, right? That's the SHIB thesis. That's why SHIB went absolutely ballistic. And now this bull run, now that Ethereum isn't the only dominant player outside of Bitcoin, right? It's all these other chains. Solana, Bonk, that's the first one. So then Bonk's gone ballistic. And now you have to ask yourself, okay, what's the next play? What's the next big chain that I think can pop off? Well, in my opinion, it's got to be Base, right? I think it's got the best flow of capital. Base is the only chain that has a solution to the exit liquidity problem. None of these other chains can bring in new users. The only way that these chains get money is from other chains bringing in money for them, right? The only way that fucking Injective is going to get money is if it takes it from some other chain. Base will get money from Coinbase bringing in new people into the market. So it's solved, in a sense, the exit liquidity problem from the front. And that's why I picked Base as the number one chain for this bull run. And I build my narratives around that flow of capital, right? What are people going to think when this money's flowing in? Because people come up with narratives to justify what price is doing, right? Price can move for no reason whatsoever, but people always like to ascribe a reason for why price does what it does. And people have spoken about this in the investing books written over 100 years ago. This is just a commonality of all human history. We need to know why things happen, what causes things to happen. Even though it could be completely random, we need to know why. We're just very curious beings, right? So what are people going to think about? What are people going to ascribe the narrative to when Base is getting all the inflow in a year or two from now, whenever it is? Well, they're going to think, okay, it's because Coinbase is the number one platform, coin stock's going ballistic. Okay, Toshi's the number one meme coin. It's going to get all the flows. Okay, it's a fun coin. I'm going to buy this one. It just makes sense to me that this is the single biggest and most profitable flow of capital and narrative for this bull run. I just can't think of anything more convincing right now. Maybe my opinion changes because it does tend to change a lot over time, but that's how I would view it. It's flow of capital and then, the narrative that could form. It's really important to think about the narrative that could form, not the narrative that's around now, right? You go on Twitter, everyone understands right now the narrative of every chain will have its meme coin. That narrative is done and dusted for now. It's not the big thing for now. I would be focusing on narratives that haven't even formed yet. So for example, I made over 100K on Blur, right? The airdrop. And I came up with a thesis that the NFT exchange that launches its own token that does a really good job will dethrone OpenSea. It will beat OpenSea because OpenSea won't have and will never have a token. They can't. Having a token is basically the Trojan horse for bringing users to your platform. It's like a marketing strategy to basically acquire users from other platforms, 100%, right?
Yeah.
And it just made sense to me at the time. This was I think it was over a year ago, my first ever YouTube video. And I was like, whichever one pulls this off, dethrones OpenSea. And Blur had its token and it had its airdrop campaign run by Paradigm, who's done a number of airdrop campaigns. Look at Frentech, same sort of thing. And it basically took all the users from OpenSea. Now Blur is the number one. And it just made sense. So that's basically finding a narrative before everyone talks about it and then waiting for it to play out, finding the best way to get exposure to that flow of capital and narrative.
Those are some great points. I mean, people are usually reactive instead of, spending that time up front to formulate that thesis, right? It's like you said, I mean, even with this meme coin, it's been milked like crazy to this point, right? Every chain is launching. And the other thing is people are getting rugged because there's a lot of these coins that are being deployed that are straight up rugs, right? People are trying to catch that next, Pepe or Toshi or whatever, and they're getting rugged on these, trying to catch them when they're launching. Yeah, I agree with you. I think right now that narrative has been pretty milked, the meme coin narrative. I mean, every chain is launching like 50 meme coins. I mean, it was crazy on Sol, like the number of meme coins that they launched on there this past week. Insane.
It's crazy. And one thing I want to add is that this meme coin sort of trend happens every cycle. Every cycle, the meme coins make the most money. Obviously, there's some projects that beat it, but generally speaking, the meme coins are the ones that create the most like wealth of like highest percent return, but also like largest market cap. Like SHIB went ballistic. I knew a guy that had at 1.2% of the supply, and you can just imagine how much that would have been worth if he kept it, but he didn't end up keeping it. And the reason he didn't keep it is he didn't have a fully fleshed out thesis behind what he was doing. And that's one of the lessons that he learned. It's that you need to have a thesis for how far things can go so that you're ready for all scenarios, right? SHIB, in hindsight, SHIB was an obvious play. It was the meme coin on Ethereum that had the adoption. It makes sense that this chain has its own meme coin that pops off. Doge is separate to Ethereum. It's gone really, really well. SHIB's like the younger brother of Doge. Like it just sort of made sense. And like this bull run, it just makes sense that each chain has its own mascot meme coin, and you buy the meme coin of the chain which is going to get the most adoption. And by having a really, really strong, solid thesis and being able to map out all the future possibilities, I am able to hold this project through large drawdowns and large upswings until it gets to a region where I would be considered the narrative having fully played out. This guy, if he had fully considered the possibility of what SHIB could have happened to it, he would have left a moon bag, or he would have had a sizable position and rode it all a large portion of the way up. That's why having a thesis is important. That's why I try to stay away from this really short-term stuff, because you don't have time to form a thesis, right? I could have gone and tried to chase all these new, what's an example? Dog with hat. I could have gone to chase that stuff, but I wouldn't have had time to spend my time on the high IQ end of the spectrum, which is like forming a proper thesis. You can obviously go to the left side and say, dog with hat is cute and buy it. But if that's your edge, go for it. But that's not my edge, right? I prefer to stay on the other side of the curve, build a really strong thesis behind something. That way, it has the lowest time investment, in my opinion, because you're holding it for the long term and you're able to capture all the potential possibilities because you've considered them up front.
Yeah, I agree with that. I think, like we were talking about earlier as well, there's different ways you can approach it, right? And it's all about having a system. I mean, I know people who snipe coins make a lot of money, right? There's people who snipe. There's people who trade absolute shitters, like 100K, like no liquidity coins, right? But they have a system in place. So, and I think it's very psychological as well. I think you need to understand. You also need to like determine what environment you're in. If you have a 9-to-5 job, which a majority of people will have, right? Or if you're full time, how much time you can give to this, how much time you can sit in front of the screen, what are the responsibilities you have. You take all that into account, your psychology, and you determine, what would be best in terms of the system you want to create, and determine what your edge is. If you talk to people and you ask them what their edge is, they can't even describe it, right? Mm-hmm. So I think that's extremely important.
Yeah, I know guys who've made millions and millions from buying absolute shitters. Yeah. And just printing like insane gains. I know a guy who made like $1 million off dog with hat. At least at one point, his portfolio was worth like $1 million. Like it's ridiculous. Like you said, it's so true. You have to pick an edge. Are you busy wanting to do crypto hands off? Well, you should probably be focused on long-term investing, automated airdrop farming operations, and maybe getting into pre-sales or anything that doesn't take much time, but has a high ROI on time invested. Are you busy focused on your business? Same thing. Are you a broke uni student who has tons of time, who's got like $3,000 to their name? Well, maybe you want to get a lot more active with it. So you got to pick the system and strategy and edge to suit your situation.
Yeah, and that's what I love about this with this space as well, is there's so many different ways you can attack it. There's people that just purely airdrop farm. Like there's people who've made tons of money just farming airdrops, and now they have, I mean, you were talking about you have like an automated strategy in place. There's a lot of people who make a ton of money just doing that, right? So it's about like determining your edge and just deploying it, having a system in place. And so go ahead.
I was just going to say, like you can craft the weirdest edges. Like I'm farming like layer 0 with like almost 1,000 wallets and base. I've got a base farming thing. We got like 3,000 wallets farming base or something. Like and it's fully automated. I didn't even do anything. Like, you can create really strange edges. Just if you have access to the right information, access to the right people, you can build really unique edges. So yeah, what were you going to say?
I was going to basically say the same thing. There's so many inefficiencies and there's so much space to maneuver around in crypto that you can basically you can create an edge out of anything. Perfectly honest, but it's like you said, you have to have a system in place. And so I wanted to pivot a little bit too, in terms of what are your thoughts on crypto as a whole? In terms, do you have like a thesis on the macro in terms of where we're headed with the ETF coming in and some of this institutional flow that's going to be coming in? Do you have any thoughts on that?
Yeah, I mean, maybe a controversial opinion. I'm definitely not a tech guy, but I really think that long term, it's Bitcoin and Solana. I think that's the two players that win. I just don't think it solves the necessary problems to be the one that wins. So I think long term, Bitcoin, Solana are the winners. Bitcoin gets the ETF, and that really helps continue to have that long term flow of capital. It really cements it as a part of a diversified portfolio. There's a number of reasons why you can argue that the ETF is bullish. People talk about the 15-second phone call where, most people will just want to tell their 400,000 US fund managers that, hey, I just want to buy a bit of Bitcoin, just put 2% in, done, boom, bought. There's a number of narratives like that. I think Bitcoin definitely, if it gets this ETF, has secured itself for the long term. Solana, I think it wins. I have a friend, he's in his 50s, and he lives in, I don't know, like South Korea, like in the mountains. He showed me his house. He lives in like some meditation dojo, and he just trades crypto for a living. And he was one of the systems engineers for the big tech companies back in the dot-com bubble. He was really as deep as you can get in the dot-com, bubble, like, tech space back then. And he's now just as deep in crypto as he was in tech back then. And most of the guys who were as deep as he was back then were basically became incredibly wealthy, and they didn't keep up to date with the latest tech, right? They made their 10 mil and they don't really care anymore. They're old, they don't care about crypto. They think it's a scam. But this guy, just as up to date as he was back then. And because he saw back then what worked, what companies went on to be successful, why they were successful, what their back-end systems were, and he was a systems engineer. So he literally has the exact knowledge base and understanding for how to pick whatever the best blockchain technology is, right? And you look at the Solana team, and they've been developing this related tech for decades. And you look at Fire Dancer being developed by people who are the best in their particular craft, similar to, developing blockchain technology for decades. And this guy basically has always been messaging me and always saying it's Bitcoin and Solana. Like, yeah, Solana, FTX, that whole debacle has really affected Solana. When he was messaging me 6 months ago, but he was like, from the fire, from these ashes, there is going to rise some very, very impressive and big DeFi related protocols. And you can see that's happened now with Jupiter. It's going to launch very soon, probably at a very, very impressive valuation. And I think that based off what I've learned from him, I just think that, yeah, long term, Solana, it's the winner. It's just, if you know tech, if you know systems, if you know blockchain and that sort of stuff, it just makes sense. Solana is the best. It's just, and I'm not a tech guy. I'm definitely like referring to my friend's knowledge here and trying to impart it onto you guys, but that's my take at least. But I don't really play that long-term game. I'm just a 24-year-old who knows how to make money in crypto, right?
Yeah, no, that was, you mentioned some great points. And I mean, I'm the same. I'm not super technical when it comes to DeFi or crypto. Like, I just stick to the things that I know. And I agree with you. Not financial advice, but I'm pretty bullish on Sol as a whole, as an ecosystem. I don't think there's any reason not to be, especially now. I don't think there, but even like months ago, I was looking at the ecosystem, even at the bottom, like I saw that they were still building, there was still a community there. And that's why I was bullish on it. I do think that ETH is definitely inclined to say that it is going to underperform its competitors. And yeah, I'm bullish on Solana.
And this is more like long term. Like,
yeah, long term.
Like, I think Ethereum has one last bull run where it does really well. Let's say in a week or two, Bitcoin gets an ETF, the narrative instantly shifts to Ethereum. Ethereum's been massively underperforming. It's been a massive laggard. It just makes sense to me that Ethereum does have a big rally after Bitcoin gets an ETF approval, because it's the next logical one. Just makes sense. Now, after that, I'm not sure I would really be super bullish on Ethereum. I don't see many universes where I'd want to, hold that one for the long term. After this whole ETF pump has happened. I don't really want to get too deep into it because I'm not super expert on it, but that's my personal opinion.
Yeah, I agree with you. I mean, I'm sitting in a long right now, and I've held on to ETH. I've had a bag for a little bit, maybe a little bit too long, but I was waiting for this mean reversion to play out. It's showing some life currently, but I do think, like you said, I believe that we see some mean reversion, but then I don't know what happens after that. So I'm just going to cut that trade off once I see that's topped out, and we'll take it from there. But of course, not financial advice. I'm not an expert either in terms of technicals and fundamental, like super technical things when it comes to crypto and DeFi. So just want to put that disclaimer out there. All right. So now we've gotten into some great areas, and I want to pivot a little bit and talk about, what does your typical routine look like currently? What do you like? What does your typical day look like? I mean, for me, it's been pretty hectic recently. I'm not gonna lie. Like, my sleep's been affected past 3 years. I'm not gonna say that it hasn't, but yeah, I try to have a routine, and I'm just curious, whenever I talk to someone, if they follow a typical routine and how their day looks like.
I would say as well, my time has definitely been pretty busy the past month. Definitely, things have been going crazy. This is the time to be really leveraging your time to focus on crypto. There was maybe one night where my sleep was sort of affected. My brain just didn't shut off. I think I must have made like a lot of money that day or something, but generally sleep's been fine, getting normal amount of sleep, just working a little bit more than normal. I would say that, okay, I wake up at like 10 a.m., I train with my coach, then I get on the computer, do like a couple hours of like sort of like, checking up on messages, checking up on the market sort of thing. And then I go about my day, do like regular errands, for a few hours. And then I have like an afternoon nap. And then I wake up from my nap, and then at like 8 p.m. also. And then I work till like 2 a.m. And that 8 p.m. till 2 a.m. is like super, super productive. It's like 4 to 6 hours of really deep work. And I just do that every day. And I don't try to affect my sleep cycle. I don't work too much that it affects like next week's work. I try to keep it where I'm working at my maximum capacity, but sustainable for the long term. The reason I'm able to do this is a lot of people are really, really active with their strategies. So for half the year or most of the year, they're not really spending much time on crypto. But then the bull run comes around. Now they're spending 20 hours a day looking at charts, trying to like buy shitters and trade. I don't have any really active strategies in crypto. Everything I do is really hands off. And I do that intentionally because I don't want to just be this crypto dude sucked into the crypto life. I actually have a life outside of crypto. And also, I run businesses that require time. And if I'm spending 10 hours a day trading, I just don't have time for my businesses. So I've designed my life where all the strategies I do are hands off. I don't actually have to spend much time at all actually analyzing the market, because I built systems with the automated airdrop farming, for example. I don't do anything, literally don't do anything, because I have guys who do it all for me. With my pre-sales is the other edge that I have. I don't do anything because this other guy sources the best deals for me. Long-term investing. I don't really do much with that because I have a team who helps me design my systems, right? I've been building algorithms for years with my dev team, right? I've got full-time devs who help me build systems to know where to buy and know where to sell. So the time investment there is maybe like 30, 60 minutes a day, looking at all the data, seeing if there's any confluence of whether it's time to buy or sell. And then that gives me a lot of time to basically just spend my time wherever I think it's best spent. So maybe, I want to research one day into a particular chain. Maybe I want to do this or that. But I keep it as efficient as possible, highest return on investment on my time, because I'm already making, like $500,000 an hour from business. So any time I spend on crypto has to make me more than that, right? So there's not many things in crypto where you can say it's making you more than $1,000 an hour, right? And that's why I do it like this. But if I was full-time DGen, I would be barely getting any sleep. Like,
yeah, so you detail that perfectly. And I think, it takes some time to get to that. Like, for anyone listening in, obviously you have to put in the time up front. You are going to be in a position where you might have those nights where you're not sleeping, in the beginning, right? To get to a position so your day looks like the way you want it to look like, or you're spending time in a certain manner. So I think, like you said, we discussed this before too. It's all about determining how you want your life to look like. What your current environment is in terms of your responsibilities. If you work a 9-to-5 job, and basically create a strategy or a system based around that.
Mm-hmm. Well, money is only so important, and I already make enough money that I don't need to do crypto. And if you're going to do crypto, you need to make it not ruin your life. You shouldn't go, I will ruin my life for this next year so that I can make $1 million. I don't know if that's a fair trade. A lot of people say it's a fair trade, but I wouldn't take that trade. If let's say you got 10K to your name and you're in a really shit situation and you're ready to grind it out and spend all day looking at your computer and sacrifice all the other areas of your life, then go for it. My personal situation, I don't need to. I don't want to. I would like to keep all the other areas of my life intact and working well. And the only way I can do that is by making crypto hands off. So like you said, it's just about understanding yourself and what you want. But also, I've been in the game for 6 years now. I've done the time in the trenches, right?
Exactly.
It's easy for me to say that it's hands off after I spent years and years making it hands off.
Yeah.
And even when I say it's hands off, and even when I say it's hands off, I might work 4 hours in a day, but I had 100 man hours spent that day from other people, right? The network that I have or the employees that I have. And this is like scaling your crypto portfolio to a large degree is just like scaling a company. You have to have people who do the low level tasks. So for example, I don't spend all day on CoinGecko. Oh, CoinGecko, let's go through the coins one by one. Waste of time. I have a network where I, have people who go out and find projects. They bring them to me, and then I do my basically 30-second intuition check. This is a video that I made talking about how intuition is a really important component of investing. The best investors, the best traders can know if something's good within 30 seconds. So you look at a coin, you will know immediately, is this good or bad? Just by looking at it. 30 seconds a minute. And that's as much as you would need for me to have like a selection of maybe 20 coins that I really like. And then I'll be researching in depth into those to really build a strong thesis. Like, for example, the second I saw Toshi, I knew it was good. I was like, oh, bro, like, this is a no-brainer. Just look at it. Just knew instantly. And, that takes 6 years to form. And if you don't have that pattern recognition database, you'll hear me say this and you'll go, oh, that's stupid. That doesn't exist. I put this video out talking about this concept. All the dumb people in the comments are like, this doesn't happen. You can't just look at a coin and know it's good in 30 seconds. And then I got a bunch of DMs from super smart people going, fuck, that's so true. Yeah, literally. Like even Kun was like, yeah, I can tell, I can be in a position within 30 seconds if I think it's good.
Yeah, it's pattern recognition. But exactly like you said, you need to put in the time, right? And I want to bring it back to that. You have the luxury now because you've spent all that time.
Yep.
You've been at it for a long time, and I've been at it for a long time as well. But what I'm trying to tell people is like, you need to put in that time up front. You need to get dirty, lose the money, learn those painful lessons to get to a point where, you're saying like you could look at something and determine within 30 seconds, or is this going to be worth putting money into?
Mm-hmm. And that edge is huge, right? If you're a new investor, you have to spend hours to get what we get in 30 seconds. And that's why as a new guy, it's hard to make money. Because you're competing against the 30-second analyzer who makes money from literally like 3 seconds of analysis. Or not even not 3 seconds, but you know what I mean, right? You're buying a new shitter, right? How long do you have to know if it's good to buy or not? You don't have very long. You've got very minimal time to go from knowing it to buying it. And the more intuition you can involve in that very quick decision-making process, the more it's intuition back, the better. Right? Because if you're just buying a random shitter without having intuition, what are you basing anything on? You're consciously analyzing things, which is only going to get you so far.
Yeah, 100%. 100%. And the other thing I wanted to ask you was, how do you manage stress? Because you juggle a lot of different things. I mean, for me, I work out, I take a cold shower in the morning, all the typical things that are done to manage stress. I wanted to know what you do for that.
Honestly, don't really have much stress. A lot of people have morning routines. I can show you right now my morning routine. So I'm asleep, eyes wake up, phone, 2 seconds, straight to work. That's probably about the extent of my morning routine. My bedtime routine is this. Okay, put it on charge, sleep. That's my morning and nighttime routine. It works for me. A lot of people like to do more. Totally fine. I don't, whatever works for you, but that's just what I do. Stress. I think the key with stress management is just to not neglect any particular area of your life. There's non-negotiables you must complete every day. I would view being happy as the same as eating and drinking. It's like you have to fill it up. Like you eat food so you're not hungry, drink water so you're not dehydrated. You do X things so that you're not sad or not stressed. So every day or 5 days a week, you got to go to the gym. You have to, not to sound like socially autistic, but if you want to view the social component, you could be like, I have to speak to 5 to 10 people a day. So maybe that sounds super autistic.
That's a good no, but the thing is, that's actually a good one because I personally know a lot of people in crypto that do not talk to anyone for days. They're just online 24/7.
Yeah, so and you wonder why you get stressed. It's not the market stressing you. It's the fact that you didn't complete the other areas of your life. It's like wondering why you're hungry when you're drinking smoothies all day. Like, you're trying to use liquid for food. No, you need to put a steak into you. So there's non-negotiables. My non-negotiables, I'm giving you the non-negotiables in an autistic sounding way, but I don't follow it this autistically. I'm just explaining it to you like this so it's as simple as possible to understand. You should, if you're struggling with stress, have at least 5 social interactions a day. This is why you can't just have everything delivered to your house, because you're never going to leave. You're never going to talk to anyone. So you should probably go to the supermarket and buy some fucking groceries, even if you make millions of dollars. Probably should go pick up the mail from the post office. Probably should go buy clothes from the shops instead of getting it from Amazon. Probably should go buy that camera lens from the shop instead of buying it from Amazon, right? Like, try to keep social interactions in your day. This is why, like, going out and eating at cafes and shit might be helpful for you. 5 days a week gym, so you have to get gym. 5 days a week sun, so you have to be out in the sun like a minimum an hour 5 days a week. Like, you need to get sunlight all the time. Healthy food, you got to eat healthy. Can't just eat McDonald's all the time. I like waking up in the morning and not eating for 5 hours, and then I haven't had any food, by the way. It's like, what time is it? One. I woke up at like 9 or something. So yeah, you have a big steak, big healthy steak, sparkling water. Don't drink the tap water. I don't drink coffee. I try to stay away from it. But if you're doing stimulants like fucking Zins, or you're drinking all the time, these things will fuck up your mental balance. I think if you want to party, like, go for it. But yeah, I try to keep things as pure as possible. But that's the key. Just you can't neglect any area. That's the problem with crypto people, right? They spend all this time focused on crypto to try to maximize the money, but then they forget all the other parts, and then they wonder why they're stressed. It's like, you're fat. Like, you should be stressed.
I actually think, like, if they paid attention to these other areas, like, it would actually benefit their performance. You know what I mean?
Yeah,
like,
you'd probably make more money.
Yeah, 100%. Like, look after your body, look after your health. Like you said, have social interaction with social beings. Like, it's funny you mentioned that. Anyone that's listening in might think it's funny, but I know people who get everything delivered to their, like, they don't leave their house. They're on their screen 24/7. Different things work for different people. We were talking about earlier as well. There's pros and cons. There's certain things that you have as non-negotiables. There's certain goals you have. You want to approach life a certain way. Like, there's no wrong way to go about doing it. I personally think, like you mentioned, having a bit of a balanced approach, having some non-negotiables, like having a discussion with someone, working out a couple of times a week. I do like 4 times a week right now. I'm on 4-day split, but yeah, 4 to 5 days a week, getting some cardio in, making sure you're eating healthy. And I also agree with you in terms of, like, the intermittent fasting. I do the same. And I think being a little bit hungry in the morning, is there something ancestral about it? Like, being a little bit hungry, like, really boosts the way, like, I've seen my thinking improves a lot. Like, the ideas that I get and how, like, I perform, I think it really improves.
Mm-hmm.
And so, yeah, like you mentioned some great points. I completely agree with that.
Mm-hmm. Yeah. I mean, the fasting thing is it's so valuable. Like, breakfast, biggest scam ever invented. Like, I can't believe I ever ate breakfast. The best feeling in the world. You want it. Like, I don't drink coffee, and people are like, how do you get all this energy? Like, how do you not have coffee? You want energy? Don't eat for the first 5 hours of the day. Yeah. Just drink sparkling water and have a ton of work to do. Like, yes. like you think coffee is powerful? Put me in front of a computer with a ton of work to do and no food for 5 hours. I will guarantee you I get more coffee feeling than you get having fucking 3 espressos. I guarantee I have and house music, no food, man. Tons of work. Guarantee you no coffee is going to beat that. Like, you can't compete
I feel like a machine. You feel like a machine. And the other thing I do, and it's not for everyone, but taking a freezing cold shower first thing in the morning, I swear, I mean, it sucks. It's gonna suck, but it hits you, man. Like, the energy I get, it's like sustained release. So what I do is intermittent fasting, cold shower, and then, I can get so much work done every morning because of that. Like you said, I mean, it's just energy. You don't need caffeine. Although I do consume caffeine later on in the day when I need it. The problem is I got into pre-workout, so like that kind of made me a stim addict later, in terms of go to the gym and stuff. But one hack that I would like to give, if anyone's listening in, if you consume caffeine, wait 2 hours after you wake up. Because your cortisol levels are peaking when you first wake up. So if you consume it 2 hours after you wake up, it'll be a more sustained release versus having that peak in the crash. So just a little tip.
Yeah, I agree. I think that also some people, they're built to be stimulant maxing. Like, I have a friend, he's one of my, I guess you call it, developers for my long-term investing stuff. And he just stimulant maxing, like coffees, fucking Zins, everything, man. And it works for him because he's that sort of guy. Whereas I'm very much a purist. I don't have never had drugs in my life. And that's not because I don't have fun. I have tons of fun. I just don't have drugs. I barely drink coffee. I will drink like when I'm like, like boozing, but I never have like a fucking beer for dinner or some bullshit. Like you said, you have a coffee in the afternoon to give yourself
Yeah,
energy.
man.
I have a nap instead. That's my coffee.
Yeah, yeah.
So like you have to like pick what works for you. I'm a
Right.
purist. Other people like my friend might be more like a fucking stimulant maxer. So don't try to be like me or like
Yeah, yeah,
like
yeah.
Stoic, depending on, it depends what suits you.
And this goes back to the point that we've been talking about since the beginning. Like, you need to figure out what works for you. Imagine what you want your day to look like, just like having a system for how you invest, how you trade, approach life in the same manner. Think about how you want your day to look like and figure out what works for you and just go and tackle that shit. You know what I mean? Just take it that way. So, okay, so that's great. And then we're coming, I can't believe we've been talking for about an hour and a half now. That went by really quick. So this conversation has been great. I want to wrap it up, but before we wrap it up, I wanted to ask you if there's any story that you want to share that might be insightful for anyone listening in.
Story.
Yeah, anything. And since you've been in crypto, even outside of crypto, anything you think might be insightful. Any experience that you've gone through, any loss that you experienced that really taught you something.
I mean, I think it's always ends up being the most recent one because that's the one that comes into your head first.
Right.
It's like recency bias.
Yeah.
My friend that I talked about with the SHIB thing, he had 2% of the SHIB supply. I won't mention who he was, but like, because he wants to be private, but like, I think it was worth $400 million at the peak. And obviously he didn't have it at that point. And obviously everyone's an on-paper millionaire or on-paper billionaire. Like we all had the story of when you could have not sold that coin or not bought that coin. I think the key to solve the problem of missing these big opportunities or selling too early or doing all of that is you need to have a thesis and you need to consider all possibilities and you need to have a reason for why you hold things. You need to be able to forward look into the future because that guy's story of having all that SHIB supply, he could have had all this extra money and he could have formed a thesis to justify the valuation that SHIB got to. He could have said that bull runs do crazy things. I'll keep a moon bag. And like I understand that Dogecoin is this market cap, so SHIB could get to a similar level. Like there's no Doge competitor. Why isn't there? There should be. Like you could have built a thesis before it went up to justify it. And the reason that he didn't hold it is he just didn't have the full thesis behind it. So with whatever investment you buy, you should be so fucking deep into that project, into that ecosystem, into that narrative, that understanding of the flow of money. You should just understand everything. You should be like, when you look into a coin with all of your time and attention, you become a professional. You buy the bottoms, you sell the tops. Like I've noticed this with the coins that I really study. Like I ace it. Like I'm getting great entries, I'm getting great exits. It's because it's what I focus all my time and attention on. But when I've got a coin that I've only really sort of looked into, I end up like fumbling the entries. Like I don't do it right. So whatever you decide to buy, really like get super fucking deep into that ecosystem. So for example, one of the mistakes I made recently was I knew that Solana was going to win, but I didn't fully extrapolate out that thesis to maximize the money from it. What I could have done was, okay, so Solana is going to be the big play of this bull run and it's severely undervalued. Why don't I farm all of its projects in its ecosystem? I should have done that. I would have made so much money. I got 1,000 Layer Zero wallets. Imagine if I had 1,000 Jito wallets. I would have printed. Like, so stupid. So that's me not fully, going in on a thesis when I had one, not fully conceptualizing the extent of the thesis, right? And this relates back to another fundamental characteristic that I use. It's second and third order consequences. Okay, if Solana wins, what happens after that, right? What's the next consequence? What consequence is a result of the action? So Solana wins. Okay, well, Solana's ecosystem probably goes off. So there's probably going to be a bunch of airdrops. Is there any airdrop campaigns? Okay, Jito, Jupiter, MarginFi. Okay, cool. That would have been a very logical conclusion I could have come to if I had properly really looked into that thesis. So that's what I would say. Whatever investment you have, you're going to have regrets. But if you just fully went in, had a thesis, saw all the possibilities, did the second, third order consequences, all that sort of shit, you can do really well.
Yeah, that's a great point. I mean, I was in the same boat. I could not fully maximize, the thesis that I had on Solana in terms of the airdrop. And I think a lot of people are in the same boat. But like you said, it's so blatant looking back at it now, right? like the second and third order consequences. But now looking back at it, it's like, why the fuck did I miss that? Like, it's so obvious that that's what was going to happen if Solana was going to be successful. But like you said, you have to dig in deep. It can't just be surface level. Like, you have to go all the way in to extract maximum value and to capture those second and third order consequences.
Mm-hmm. And look, Toshi, I'd say there's a good probability Toshi goes to $1 billion market cap. And if it did, it would be fully justified if it did. And people would go, this is so obvious. If it gets there, it's going to look so obvious. And you guys are going to be so mad at yourself for missing that. So
awesome, man. Awesome. And then I guess
not financial
are there
advice.
Not financial advice, disclaimer there. And then in terms of account recommendations, are there any accounts that you'd recommend for people listening in on Twitter? And any other advice that you'd like to add?
Yeah, I mean, one of my favorite follows is definitely Kun, the guy that you had on the podcast here. So definitely recommend following him. Pentoshi's good for market cycles and understanding emotions. Who else we got? I followed a couple new guys recently who are really good, but I forgot their names. I think for macro, I really like Kruger Macro. He's got really good macro insights. But really, if you just go through my following list on Twitter, I only follow people who I think are smart. So you can they're all recommended follows if you go through my following list.
Awesome. And any last word for listeners in terms of advice? I mean, we've covered a lot of amazing things here. So, but if there's anything else you'd like to say.
Yeah, I would say that if you don't make money for 3-4 years in crypto, that's totally fine. Or if you make a bunch of money and lose it all, that's totally fine. Part of the process, it's inevitable. You're going to lose a bunch of money. I've spoken to thousands of investors. They all have the same story. Everyone goes through the same thing. It's like a warehouse where they got like this, product building line, right? Like it goes through here. This happens to it. It goes through here, adds this part. Like there's a production line that you're going to have to go through. You can't avoid it. You can't hop off it. You're going to lose money. You're going to suck for years. It just happens. So you just have to embrace it. When the bear market comes, you can't disappear. You have to stick around or you're just never going to make money. So you just have to understand that it's going to be that amount of time, and that's just a part of the game.
Yeah, it's great that you mentioned that because I have a story to tell, a really brief story regarding that. One of my friends, he was talking to this Bitcoin maxi, and this guy made a ton of money on the BRC20s and the ordinal stuff, right? And that popped off beginning of this year. Then it quieted down. Like there was a pop off in the beginning of this year where everyone was going crazy over the inscriptions and everything. I don't know if you followed that. But then it kind of died off the rest of the year. And this last month or two, people have been printing money up, in terms of BRC20s and inscriptions and all that stuff. So he was asking the guy, he's like, why, can you give me some alpha? Like, what's going on? And, he's like, he told him one thing. He's like, you got to stick around during the quiet times, brother. You got to stick around during the quiet times. So thank you once again for taking the time and having this conversation with me, Dan. It was a pleasure. This was an amazing discussion. I hope it was insightful for anyone listening in. Yeah,
thank you for having me on. You're very, very good at asking questions. I think this is my favorite one that I've come on. So you're doing a really good job here, and I appreciate your time as well.
I appreciate that, man. Anyone listening in, I hope you enjoyed listening into this conversation with Dan. Thank you for tuning in to this episode of Perpetual Perspectives. I'll be back with your favorite trader, investor, or DeFi analyst in the next episode. We're out.
See ya.